Hi there, welcome to my blog once again, tlwstockbrokers.wordpress.com. Today we'll be looking at what the NSCSI did technically on Friday. Generally, I've been writing for so long on the market, and some of my viewers asked me they needed to know what I meant by the head and shoulder pattern, and which I decided to do on video to explain what everything was. First, I'm looking at the moving averages. Since I'm a very quick trader, a floor trader, day trader, I normally use the 5-day moving average as my as a quick trend to test the market. And I said in my report that the 5-day moving average since June has acted as very good support levels here till July, until we start seeing some signs of chart spinning around. Now it's trading. It started trading below 5-day moving average around August. That we're looking about August 7th. That's when price dropped below the 5-day moving average. And coupled with the fact that the 20-day moving average is coming up straight, strong. And there was one thing I noticed, which I told brokers, that generally when these points hit, you can see those spikes. This was the first spike. When there's a crossover between 5 and 20 days, there's always a huge spike. This was the descending spike. You can see the spikes. This was another spike. Now the next one is we need these levels. So there was actually a crossover within, but market has adjusted since then. So what we'll be looking at is the chart pattern. What chart pattern am I seeing as a technical analyst? I'm seeing what we call it the head and shoulder pattern, and which is this top here. This was the peak of the market. In fact, for the whole year, I think this is the highest for the market at the year to date, which was about 23,523 points. Yeah, that was created on the 3rd of August. And since then, we're having series of lower highs, lower lows, and the rest, finding support within this level. So from this level, we can say this is the head. The head of the pattern. These two can act as the left shoulder of the pattern, and this will be the right shoulder of the pattern. And basically what happens during head and shoulder pattern is this straight line. We'll call this is the neckline. The neckline of the market. So what's happening that market is trending within this neckline. You can see this neckline is acting as good support level within this period. Is bouncing within this level and still trending below the 5-day moving average. This really is what we need to watch and see what happens the coming week. The rebound within the neckline has saved the head and pattern chart from continuing, because if we're to look at the true range of the market, if this head and shoulder pattern is completed, we'll be looking within 23,524 to about 23,045. So we'll be looking at an average of about let's say 4 to 500 points. And looking down, we look at about, that means I'll be looking at the trend I've been seeing from my blog. At least we're looking at this level. That's about this level for the head and shoulder to complete. That means we're looking at from this height to the neckline. will fall the same length from here to here. So this is what will complete this head and shoulder pattern formation. But meanwhile, you can see that the bulls are the NSCSI is finding strong support within the 23,000 point. Though we witnessed some intraday within 22,900 period, but at the end of the day it closed above the 23,000 mark. And these are the areas we'll be watching this week, how the bulls are going to hold on to this level. On the NSE 30, we are seeing almost the same thing. The head shoulder patterns, resistance levels. You can see the NSE 30 is trading within a tight band of 1076 to about 1086. Both ways, if there's a breakout along this level, we'll be going back to about 1096. A break below this level will take us about 1066. So there's a 10-point gap within these levels, which the market will need to sort itself out at the end of the day. On the banking sector, I said this was actually a tricky sector for now because number one, okay, this is the all-time high. Yep. And is approaching another level. That's the current rally is approaching the second rally of a resistance line. And from my indicator, from my indicator, okay, my 15-day RSI has made a new high. Price here is within the new high. Indicator here has not made a new high within this. So what are we seeing? And is within some resistance level. It shows that this sector still has room to break this line on huge volume, that this line is going to be broken to the upside. Now the tricky thing is, if the price pulls back within this region to the downside, then this is a false move. This is a false move which will affect the sector more. That means the possibility that the sector is going to fall more because this high, we've made this a new high and this is a lower high, higher high, lower high, higher high, high high. So this one at the end of the day, we call it what they call, is going to be a bearish divergence, which will not be too good for the sector. So we need to see how these areas play during the week. The next area we'll be looking again will be the food, beverages and tobacco. That one has been consistent, moving high with some small correction within the 1980 points. My 15-day RSI is signaling that level of resistance, while this current one is on a very low part. So possibility that this trend looks flat and needs to maintain it above the 5 and 20-day moving average. The insurance sector is actually below every moving average and is trending flat. RSI levels are not too strong. I would say they are more of sideways. I see RSI levels above I see RSI levels above 50 to be strong trends. Anything below 45 are more of short term. LII still new. We are seeing that same pattern of the head and shoulder formation. That is the left shoulder, the head, and the last one is the right shoulder. So my neckline will be something looking basically around that'll be the neckline possibly, or we're drawing it from here depending. There are two ways. Okay, let's leave that. So the distance will be from 1373 to about 1345. That's about 30 points. That's the stretch. Since it's a new index, I'm looking about 1373 minus 1346. That means we'll be looking about 131 something at the end of the day. So down further. The next one will be the oil and gas. It's really it's in a mess. So the sector is in a mess. We've been recording more of look at the historical. It's just a mess. Look, high, high, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows to date, and we are forming what we call lower highs, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. Just so we don't even know for now. We don't even know where we will say this is the end, where this sector is gonna go. So for me, I don't trade this area for now. It's a no go. It's a no go area. Well, basically we'll be looking at some other trends, some of the banking sector and how far they've been doing. And one thing I'm looking at, I'm looking at two, and that would be Zenith and Zenith and yeah, we're looking at Zenith. Zenith has been trending, has resistance within let's say 15 naira, 30 something kobo, and it's trading within a very tight channel for now, trying to determine what level is gonna be. But what I can say is that this for now, this is a divergence. This is a lower low. I mean lower high, and we'll be looking at this current trend. The price is still stable within this region, and it has room for more breakouts. I think that we're looking more breakout in the long run. Possibly we're looking at between the 15 naira 93 kobo levels. Quickly, First Bank. There is one interesting sector. I think this stock is going to break out. Brokers should watch out for this stock. It's trending within the tight period of let's say 1240, and the RSI level is still low. There's still room for making high highs, and we're looking at within let's say 1260 to about 1275 room. I think I need to go for now. I'll see you again next week. Wishing you best trading. Thanks. Bye.